so divine. I'm so divine. In perfection,
money, okay, and purchase yourself an insurance policy. Okay, why would we do that? Well, number one, not just any type of insurance policy, specifically a whole life insurance policy or a universal and index universal life policy.
Okay, let me stop you. It's like, what do you say whole life insurance? Is it half life insurance? I mean, what do you mean by whole life?
Right. So so typically there's generally two types of insurance, right? You have term life, right, which means it terminates at a certain point, or it's only valid for a certain year or a certain number of time, right? And then it terminates. Okay. Whole life is basically, it sounds just what it is. It's for your whole life. And so if you have to look at term versus whole life, it's like renting versus owning, right? When you rent, you pay all this money and you don't get never get to own it, right? But when you own it, right, you pay a mortgage, and then what happens? You build something called what?
Equity.
Right? Oh, he's trying to teach us something. You ain't gonna do that to us.
Yeah, everybody comes over here trying to take somebody's job, right? Go ahead, man. Go ahead, continue. This is important.
I'll just get real estate terms for the audience. But, so the whole life is equivalent to basically owning, right? Because what happens is, just like the equity you build in a house, you build cash value in a whole life insurance policy. Okay. Now that cash value, depending on, your premium and how much your premium is, how much you're paying on a monthly, annual basis is going to determine how much cash value you build up in that policy. Does that make sense?
Yeah.
1000%.
Okay. And so, so that's the two the two different policies you'll see. Now, there are different types of whole life policies, right? You have a variable life, right? Variable universal life, excuse me. And then you have an index universal life. Okay. And so those are typically what we really, what we use in terms of investing investing in ourselves to be able to do better than what the banks are doing for us.
So